Welcome again to another video. This is going to be for the dynamic trend lines of mastering the basics. You want to master the basics. Wow, we've got a lot of information in this one. And then after we have volume at price, the VAP, this one's small. And then the tradable VPA setups, which we haven't built yet. So first things first, dynamic trend lines. All right, number one is getting in the trend at the beginning. From the VPA specifically, buying climax and selling climax. We've already covered that. If you haven't watched the video, just watch it because it's basically at the bottoms and the tops. And then we know a new trend is about to begin. Accumulation and distribution. When the market makers have accumulated all of the supply and or all of the demand, then they can begin to trend, mark up or mark down phase. So if you understand one market, the bull market, you can understand the bear market. It's the same thing, but it's the flipped. So number two, different emotions though a lot of times, right? Bull market greed, bear market fear, a lot of stuff. So it depends on the emotions, and that's covered a little bit in support and resistances. So next is number two is you have to understand the degree of the trend. We've talked about this: primary, secondary, and minor trends via time frames. What VPA uses for scalpers is 30 minutes on the primary, secondary 15-minute, and minor 5. Repetition is the mother of all skill, right? So really understand it. You have to master this stuff. Mastering the basics. Fall in love with the basics until you don't need them anymore. No, you always need the basics, but I mean, just fall in love with the basics is the point I'm trying to say. So number three is understand the accumulation phase, the trending phase, and the distribution phase of the big money. Combine this with your intuition of the fear and greed cycles of emotions when traders are trapped. This is so basically know how to read the market is what I'm trying to say, and understand and know how to follow the smart money by reading the market, right? And that's what the Discord again is keen on trying to do and formulate is developing our think to the way that we can actually read the markets together, talk about it, ask the right questions together, and then we're actually going to start really knowing, but not waste any time. That's the point. Like, we got to have progresses, and everything in the Discord. So number four is to know the trend rules. Know the trend rules. And that's where GAN comes in handy. Because I believe GAN has all the rules, pretty much all the rules for the trend following. And we're actually going to get into it right here in this dynamic trend lines. It's one of the bigger rules, the higher lows and higher highs and double bottoms and whatnot. So look at the uptrend, higher highs and higher lows. Downtrend, you're going to want to write this down, probably look at it every day. And really imprint it in your mind. It's the same thing really as Elliott waves, right? But it's really understanding what causes it, and it's demand. There's demand right here, demand points. Okay, so and then it forms a trend line. That's what she's trying to say. It's not about a trend line, but it's about what it forms a trend line. So you want to kind of anticipate the trend lines, she's saying. So these trends lead into and out of accumulation phases and distribution, selling and climax. That's kind of what David Halsey was saying about his measured move, about the 50% is where they start accumulating, right? So let's just say that this one here was at 50%. The bots start to accumulate. This was at 50%. Let's just say the bots start accumulate, and then they distribute. The same thing here, right? Selling climax is distribution, and also known to trade SR targets. So you have to know the type of market that you're in, though. Like for example, like trading BTC is quite volatile, like this, like sharp, right? Up and down. It's not really ranging that much. So like, take a look. This right here was like the biggest range that we've had, and it's like a higher low or a higher low, just like that. So it's like that. That's how the market moves, right? And again, I still think that this is a 1, 2, 3, 4, 5. That's what I think. If you haven't watched my Elliott wave theory video, it's pretty good, I think, and gaining a lot of attention, which is good traction on YouTube. But yeah. Let's talk about number 5. Use multiple charts to try to figure out the primary, secondary, and minor trends. Those 3 charts that we were talking about at the beginning, and then know when you're trading against the dominant trend. So you have to know when you're trading with the trend, and know how when you're trading against the trend, counter trend move. Be a bull in a bull market and be a bear in bear markets. Be a bull in a bull market, a bear in a bear market. So you have to kind of know when we are in a bull market, when we're in a bear market. And so you have to have rules to kind of classify that. Like Gann, for example, has a rule, and I'm going to show you guys right here in this video because it comes to mind, using the seasonal chart, which is a 3-month chart. And he says that the moment it breaks the last low, we're in a bear market. Guess what? We haven't broke the last low yet. So we're not in a bear market, guys. We're still in a bull market, but some people might have different rules. Like you can talk about the 3-week chart, you can talk about the 3-day chart, and we're still kind of in a bull market, right? Or the monthly chart. But yeah, this was an ugly candle. But at this point, we're still in a bull market because of that seasonal chart, in my opinion. But yeah, I mean, and then that's why in the Discord, that's why we're saying use multiple charts so that you can figure out, are we bullish on the macro and then bearish on the middle one, right? And then bearish on the micro. So that's why that's important. And then finally, 6, use the pivot high, pivot low to define the congestion area for 3 trends: the primary, secondary, and minor. So you that's basically what you're going to be trading, your trading levels. Okay, so indicating a reversal or a temporary pause leading to a continuation. Have the ceilings, the tops, the floors in place. So that's where basically these are going to be your levels. And did I put that here? No, let's take a look at the pivot pattern. So we talked about the pivot pattern in the last video, and this is how it looks. And this is basically how you're going to basically put a line here, high here, and then a low here. So put your trend line here, or your horizontal line here, and here, and then basically you've got yourself a range. And the same thing on the upside. You got yourself a range of the reversals. So this is a pivot high right here, and then a pivot lows. Okay. So yeah, tops and bottoms in place for respective time frames. Also keep an eye on the volume indicator to see if the volume is rising or following. This is basic concepts. These are rules for this strategy, VPA. Expect pullbacks. They will either be true reversals or temporary pauses leading to continuation. This is a pullback, this is a pullback, this is a pullback, and continuation. Continuation, and that's called pivot low. This is a pivot low, pivot low, pivot low, all depending on the position of the asset, aka VPA, volume weighted, top heavy, top bottom, and we're going to talk about that volume at price. VPA, volume, top heavy or bottom heavy, but you can also look at just the candle and see candle volume and see if it's top heavy. So all these steps, 7 steps, build a dynamic trends and trend lines that get us at the beginning of the trend with small minimal risks. So at the end it looks like this, right? But you as a VPA trader would have got in here, would have got out here, would have got in here, would have got out here. Maybe you learn from your mistake, because this is there probably would have been a test right here, right? There probably would have been a couple tests, a test right here, and then you want to see the test on low volume. If you see a test on high volume, you know there's something wrong, because there's too much selling. But not to say that it might not chop, because it might chop, because they're gonna have to push up anyways to chop you out. That's why you have to really understand the market makers and what market that you're in. So remember the uptrend and downtrend rule. Go with the dominant trend and know when the 3 are not in harmony versus in harmony with each other. So this is where the stars will align. Yeah, you need the stars to align. This is all time frames and all the confluence with all the degrees of the time frame trends. So this is dynamic trends, the picture all in one. Once again, this kind of looks like BTC, right? Looks exactly like BTC. accumulation range, breakout, high volume, probably had your test on low volume, made on low volume, yeah, and then boom, 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 and then pivot low defined. This is a pivot low. This is an uptrend. Literally definition of an uptrend. Higher high, higher low, higher high, low, higher high, low, higher low. So pivot highs defined and pivot lows, and then it just makes a range until finally there's too much supply and it breaks the low or it breaks the top. Gann has rules for all this stuff, okay? VPA throughout. So this is like straight up from his book, and I really like and enjoy reading his book. I'm reading it right now. His books, I've got like 7 or 8 of them, and the way he describes it is amazing because he actually builds strategies on how to trade this exact concept. Okay, this is great. So let's continue here on the downside. So this is actually the bearish. So the same thing in distribution tops, right? So this is distribution, this was accumulation. And you see that the market makers distribute their inventory at high levels. Of course, they want to make a profit. So they start distributing at high levels. It forms a range, some type of range. Can you either go sideways or like this, like we saw on BTC. So yeah, at high levels causes top heavy bull trapped regions, right? Bull trap regions right here, breaks out, loses the trend, right? It loses this right here and actually causes a downtrend. When the prices starts falling out of the floor of support, the buyers who bought the top are now panicking and they want to take their loss. So right here, the pullback, those are generally the best ones to short. A lot of times it comes a little bit higher, but this time it came right inside of the bottoms because there's so much supply. So many people took a loss right here, and this is straight supply. So that's usually the best ones to take a trade right here on 100x leverage. Not 100x, but you know, to push maybe, I mean, probably not though. Yeah, so I mean, money management, at the end of the day, it becomes money management, right? It's your money management strategy. After you know, this is the VPA strategy, okay? So this is the floor support, and the buyers who bought now panicking needs to sell out, take a loss and get out ASAP because it's going to come down very strong after congestion. Lots of bull trapped pressure to the downside because everybody bought the top. Now it's coming down. They need to sell, and because they're a lot of times, what do we say about the tops? Traders are over leveraged at the tops and undercapitalized at the bottoms because they lose so much money in this phase right here. Unfortunate, but once you learn to know the signs, you don't have to be over leveraged at the tops, and you're not going to be a public investor that mortgages their house to try to make profits in the market. This is not, because so over leveraged at the tops, undercapitalized at the bottom. But you got to flip the switch here. You have to understand that there's going to be some over leveraged traders. They're going to get licked if they don't take their loss, and then that's going to cause the bear pressure because of this bull trap. That's all really we have to say about this series. This series, we're going to finish it off with volume at price, one of my favorite indicators, and see you there.